All right, a quick word now on what happened today. Lots of results coming out on the market scene this afternoon or the entire day. Let's get a word now from Makwe Masilela. Makwe, I want to start with the markets and the oil share. 2% up on the day. We've seen a rally like we've seen so far in the past few months by mining shares. I mean, the likes of Sibanye-Stillwater up by 10%, Impala Platinum releasing results up by 7%. But the rand actually went the other way by the same margin, down 2% against the US dollar. Just wrap up the scene on the markets today for me.
Devan, it's an everything rally. Everything seems to be going up from your oils to the bitcoins. And it's all because people are hopeful about the economic recovery and mainly because of why they expect that the vaccine rollout will be successful. Also, the low interest rates that we are seeing that have been caused by central bankers. And also the fact that there might be a pickup of demand, especially for consumption, driven mainly by what we've seen as the interest rate environment, which is just so low. And yes, the rand, which has weakened over 2%, also managed to benefit our rand hedges. And yes, resources up because they tend to benefit when it comes to the global economy starting to reopen. So all that, they are putting together that things should look okay. And hence, we saw the U.S. Federal Reserve downplaying these inflation concerns, downplaying all these years that have been going up, saying it's all happening because markets are excited, people are happy that things will start to open up. And should that not be true, inflation gets out of control. He told us very clear that he's got the tools to be able to deal with that. But you get the likes of the European Central Bank complaining that they are a bit concerned that this rapid rise in yields might damage the recent economic recovery that we're starting to see. And even if we look at the durable goods numbers that came out of the U.S. looking pretty okay, the jobless numbers looking just fine as well, the claims thereof. And also if you check what happened also with the manufacturing from the likes of Germany, it shows you that there are some patches of growth going forward. So I think the markets are now happy that, yes, we're worried about inflation, we're worried about the yields, but because if yields keep on going up, Devan, all those companies who've been getting easy borrowing, then it means their cost has to start going up when they have to repay that kind of debt. And we know that the environment where inflation is high, interest rates are high, tends to be negative for equities. So with that, they're getting to be downplayed one way or the other, then equities gets excited.
All right, let's try to quickly go through some of those company results, right? Impala Platinum, I mean, this was record interim results, and we've seen their share price 7% up. What do you make of their figures?
That's the very same theme that we've been seeing when it comes to mining companies, all printing money. They're no longer mining platinum now lately, these guys. They're making good money. And also, if we have read on our budget speech yesterday, these are the very same guys to help with our tax collections, with this kind of profits they're making, and all because of good commodity prices that has helped them to be able to survive some of the disruptions that were caused by COVID-19.
Discovery also letting out some results here, not too. I see the share price down about 3.5% at the end of the day, so shareholders weren't too impressed about that. They tried to report some good news on the side of their banks, but what do you make of their overall results? They told us, by the way, that about 5,000 Discovery members had passed on because of COVID-19.
What's important from that one is the solid performance of their operations. You know, it looks okay. And the provision that they made, you know, for the COVID-19 deaths and also for the possible lapses of contracts, I mean, they've not used all of that. I think they put aside almost 3 billion. They just increased it now to 3.4. So markets should get some comfort from that they made sufficient provision for that. And yes, it was expected that interest rates are low, then that will affect their investments and also that loss that they made when it comes to their rand exchange rate.
Woolworths, I mean, we haven't seen a profit coming out of Woolworths in a long, long time. We've seen it today. Food business doing well, but they've got to do something about this fashion. It's not really working out for them, is it, Makwe?
It's not, and hence the guys have just changed, you know, their strategy, saying we're going to start concentrating on your leisure and sportswear because people have changed their ways of doing things, no need for formal clothes. So that's gradually moving away from that. And South Africa keeps on doing okay, especially on the food side, up almost 10%. Remember, as much as they operate in Australia and New Zealand, 62% of their revenue continues to come from South Africa. So yes, as much as they made profits, you know, this time around, the guys are still trying to manage their cash. And as a result, the guys decided not even to pay us an interim dividend. But we are happy for them that ultimately they're turning the corner.